We have just sold all of our exposure to the US stock market at bravosresearch.com. The S&P 500 index has just made a new all-time high, going on a spectacular melt-up. We've been holding trades on multiple technology and industrial stocks over the course of the last few months, but we have just sent sell alerts to all of our clients for all of these trades. We think there's going to be a big opportunity to take advantage of over the course of the coming month, and we're doing this in preparation to take advantage of it. By the way, this is your last chance to take advantage of the discount that we're doing for the 4th of July. There's only a few hours left to take advantage of it. You'll access our entire trading strategy with all of our buy and sell alerts for each trade. You can see all of our trades so far from 2025 on our homepage by clicking on the link down below. If you're interested, don't miss this deal. So we've just made the biggest shift in our portfolio allocation since March of this year, where we also decided to sell the vast majority of our exposure to the US stock market as the risk of a full-blown trade war was rising. But the situation that we're in today is quite a bit different to the one we were in back then. First of all, from a trade war perspective, tensions were rising back then, while today they've generally been cooling down, and this is very much reflected in the price action. Back in March, the S&P 500 had just broken down below key moving averages, suggesting that the uptrend that had been in place in the year prior was coming to an end. And you can see the moving averages were also curling down in March of this year, meaning the momentum of the market was also shifting from up to down. Today we have practically the polar opposite situation. The S&P 500 index recently crossed above the same key moving averages, and these have been curling back upwards, even printing something called a golden cross, which is when the 50-day moving average crosses back above the 200-day moving average. This is a famous technical signal that usually means momentum is coming back into the market and that price can continue to move higher. The last golden cross that we had was right here in early 2023, right at the beginning of the major rally that the market experienced until the end of 2024. The one before that was right here in 2020, right at the beginning of this major bull market, and the one before that in 2019, right before this large leg up. Going back to the 1950s, we've had 37 golden crosses trigger on the S&P 500, and 30 of them led the market higher in the 6 to 12 months that followed, which is a very strong track record for a technical signal. And this signal also aligns perfectly with what we've been saying about the economy staying resilient over the next 6 to 12 months. Real GDP growth in the US is still sitting nicely between 2 to 3%, which is the healthy range of economic growth, where you can see very steady and sustained bull markets occur on the US stock market. So if so many things look constructive for US stocks, how come we just exited all of our major stock trades that we've had betting long on the US stock market? Well, zooming in, over the last 60 trading sessions, the S&P 500 has returned a massive 25%. We've only seen these kind of returns a handful of times going back to the 1970s. You can see all of the instances indicated right here. Effectively, we've seen this happen 8 times before going back to 1970. Now, again, at a first glance, these all seem like pretty good areas to be buying stocks. But when we zoom in a little bit closer on the 2020 episode, for example, the S&P 500 triggered the signal on the 5th of June, printing a 25% return within 60 trading sessions, and look at what happened right after. An 8% correction occurred. Now, let's look at the signal from 2009. The S&P 500 yielded a 25% return within 60 trading sessions, and then the market pulled back by around 8% in the months that followed. Now, I won't go through every single episode in this video, but we looked at them, and in 100% of the cases where the S&P 500 showed such strong returns in such a short period of time, it ended up pulling back in the month or two that followed. Even if it was a very shallow or short-term pullback, there was some kind of turbulence. Now, I'll show you exactly how we plan to take advantage of that kind of pullback at Bravos Research in just a second, but I want to show you one more piece of evidence that supports this thesis. The S&P 500 index has been tracking almost perfectly something called the 4-year presidential election stock market seasonality. Now, this line basically tells us how the stock market has behaved on average over the last 100 years in each year of the presidential election cycle, from the election year, post-election year, mid-election year to pre-election year. Market seasonality is something that we take with a big grain of salt because there's much more important factors to take into consideration. But it does give us an idea of how investors typically behave around certain election years. And this time around, we've been tracking it almost perfectly. We typically see the S&P 500 rally going into the election and in the months after, which is exactly what we've done this time around. We then see a period of weakness in the first quarter of the post-election year, which is exactly what we've seen this time around. And then we see tremendous strength in the second quarter, which is exactly what we've seen again. Typically, the third quarter is where you see a local peak and some kind of a pullback occur. And given that this aligns with our view on the fact that the stock market is overextended today, we found it relevant to discuss in this video. But I do want to make something very clear in this video. Do not try this at home. This is purely a short-term bet that we're making as part of our trading strategy at Bravos Research. You should not be trying to time the market like this with a long-term investment portfolio. The first thing that we recommend to the clients that we have on our mentorship program is that they should separate their trading from their investing. Now, on our trading strategy at Bravos Research, we have indeed cut down our exposure to US stocks in a big way. Most of our portfolio is now made up of trades that are uncorrelated to the US stock market that we think can hold up well or even rise in the event of the market pulling back. Bitcoin, believe it or not, is one of these. If we are right about the market pulling back, however, we'll quickly be looking to load up back on trades that we think will be outperformers in the next phase of the rally. We have a watch list of stocks that we're looking to buy that fit our criteria from both a price action and fundamental standpoint, and that are in sectors of the stock market that we think will perform well. That includes the semiconductor sector that we've been talking about for some time, but also the industrials and financial sector that we think will perform well. We are raising cash today in order to give us the dry powder that we need to take advantage of these opportunities when the market pulls back. Don't forget to take advantage of the 4th of July discount that we're doing if you want to have access to all of these trades, all of our strategy, the buy and sell alerts that we send to our clients. If you're interested, don't miss the offer. Thank you for watching.